Welcome to the channel. I'm the Swedish dividend investor. So, some of you guys wanted me to take a look into VDIV or TDIV. VanEck Developed Market Dividend Leaders ETF. Cue the classical music. So, I hope my voice is better. I touched on VDIV in my video, Finding the European SCHD. However, since I was looking for an ETF with no dividend cuts, I simply ignored it due to its history. Wait a minute, this isn't the classical music I had in mind. There we go. Anyway, I thought we would do a deep dive into VDIV, check its performance, and like always, do a valuation, so we know at what price it is undervalued. If you want to support me, help me out by liking this video, and if you haven't, subscribe for more dividend content. Your interactions really help the algorithm push my videos to a larger audience. Make sure to read the disclaimer in the description down below. So, what is VDIV? I snagged this from VanEck's website. The VanEck Morningstar Developed Market Dividend Leaders UCITS ETF delivers an attractive regular income through equities. The Morningstar Global Research Company seeks the top 100 income players globally, selected for the dividend yields, resilience, and likely growth. They also highlight currently provides attractive dividend income. The top 100 developed market equities selected for dividend yields, holdings screened for dividend resilience, globally diversified across stocks and sectors. Starting off with some basic info, we are going to check just ETF.com. The ticker varies depending on what exchange you use. They have VDIV, TDIV for Euro, and TDGB for British Pounds, or TDIV on the London Exchange, but in US dollars. Man, these ETFs and their tickers. The total expense ratio is 0.38%. Fund size of 3.5 billion euros roughly. The current yield is 3.9 according to Just ETF, but my broker says just above 4%. We will see the dividend in the spreadsheet later. They pay dividends in March, June, September and December, with June having the biggest payout. I want to highlight, this ETF's ISIN number starts with NL, as in the Netherlands. So, there will be a withholding tax for sure. They hold 100 companies, and here is the top 10. But I wanted to check their entire list on their webpage, and the top 10 look a bit different, and they updated their holdings on the 17th of October. So let's check them out. Roche, Pfizer, Verizon Communications, Edge SBC Holdings, Total Energies, Rio Tinto, Allianz, Sanofi, Intensa San Paulo, and Bristol Myers Squibb. So we got some stable dividend payers here, and no high-flying tech, something very unusual, but very welcome. For their sector allocation, we have financials, healthcare, energy, utilities, consumer discretionary, telecommunication, industrials, basic materials, consumer staples, real estate, and other. So a lot in financials. Not necessarily bad, but if they got a lot of banks, it could be a problem, since they are usually the first to cut dividends as soon as someone mentions financial headwinds. And spoilers here, they hold 16 banks, so keep that in mind. Moving on with country allocation. France, US, UK, Italy, Germany, Canada, Switzerland, Japan, Spain, Singapore, Netherlands, Australia, Finland, Sweden, Norway, Poland, and other. So, how does VDIV stack up to other ETF we have looked at? Let's compare it with S&P 500, FEUI, SPYW, and let's throw in VHYL. Let's do 5 years. Surprisingly, we actually see VDIV beating the S&P 500 with its 140.67% total return, compared to S&P's 103.19%, followed by VHYL at 86.02%, SPYW at 64.54%, and FEUI at 60.75%. I'm actually a bit shocked. Only if we do the max time frame, the S&P is in the top. This is only going back to 2020 due to FEUI being a newish ETF. And if we remove FEUI, the S&P still beats VDIV. However, I would say you're taking on less risk with VDIV, since you don't have the overvalued part of the S&P. The dividend is at 4% instead of over just 1%, so the reinvestment is more powerful, especially in a downturn. I want to show you something here. I removed the other ETFs and filtered from 2022 in January until today. Now, 2022 was a pretty rough year, but look at the performance of VDIV. Damn, 71.38% versus S&P's 41.24%. Now we change it from 2022 until 2023. Look at that. This is what I mean when I say the S&P 500 is risky. VDIV at 15.76% versus S&P's negative 13.30%. VDIV has zero fucks to give. They just continue to chug along. And it's pretty obvious when you whip out a 5-year chart, up into the right. Now, as we should all know, past performance does not reflect their future performance. However, their strategy seems pretty solid. I must say, it has got me going here. Let's check their dividend history and compound annual growth rate, or CAGR, so we know how to value it. As always, we see a bit choppy history. Color me shocked. And we can see some massive growth due to the initial dividend being so low. They only have dividend stats since 2016, when the ETF was launched. So the 8-year CAGR is kind of misleading. So let's do a 7-year CAGR from 2017. So instead of 30%, we get a more reasonable growth of 10.95% 3-year, 5.43% 5-year, and 4.31% 7-year CAGR. Here we can also see this year's current dividend versus 2024 September. We have already surpassed it, and I think they will be able to exceed the total yearly dividend of 2024. I've also calculated their 12-month dividend here, 1.79 euros. So that's from December of 2024 until the latest dividend in September this year. This is used for the yield. As we can see, it is sitting at 4.03%. Very nice. Let's use this for our valuation. So 1.79 instead of 1.68. So we got some decent growth of the dividend. Speaking of valuations, it's time to do it. Every case has a discount rate of 10%. This is our required return. Normal case, I've gone with 5% growth for 10 years and a terminal multiple of 25. This represents a yield the market is willing to pay for 10 years into the future. In this case, 4%, since 100 divided by 25 is 4. We get a present value of 40.75 euros per share. Best case, growth of 7% per year and a multiple of 28, so a yield of around 3.5% 10 years in the future. We get a present value of 50.95 euros. For the worst case, I've gone with 2% growth. This is an average. This could be 5% growth for 2 years, a small cut another year, slow growth the next year, and so on. But a long-term growth of 2%. Terminal multiple of 20, so a yield of 5% 10 years from now. We are looking at a present value of 28.59 euros. But, as always, we do a mixed valuation using a probability factor. I've gone with 60% probability for normal case and 20% each for best and worst case, since I believe 5% growth in the long term isn't that exuberant, but I also believe the growth could be faster or a bit slower. We get a fair price of 40.36 euros or 36.32 euros with a 10% margin of safety. So we are pretty close to that price. Conclusion. Man, I had no idea going into this, but I actually like this ETF very much. It gives a decent yield with some growth, but they also kicked ass during our latest downturn in the market. Like I said before, this is less risky than holding the S&P 500. Sure, you might not get the insane upside when the market is euphoric, but you also don't get the steep declines when the market falls, at least from what we have seen historically. And if the ETF goes down along with the market, your 4% dividend would buy a heck more than the almost non-existing yield from the S&P 500. It's just a bit above fair value. So for you investors who invest monthly to dollar cost average, you will get a decent price. So what about me? I'm a bit shocked. Even though they have cut the dividend a tiny bit recently and the growth is just decent, I would say, of all the ETFs I've looked at, except maybe for Exact Nordic High Dividend, this is the best dividend ETF for European investors, hands down. I'm going to say it again. Stellar performance, great and meaningful dividend of around 4% and less risky compared to the S&P 500. I want this ETF and I'm very glad you guys wrote I should do a video on it. I have some holdings I want to bring up for now. This is the year of high yield, but I will start to buy this in 2026 unless we get a decent correction and this ETF becomes heavily undervalued. I could easily see this as a pillar in my portfolio, along with Exact Nordic and JP Morgan Global. I want to make this one of the largest holdings in my portfolio. One thing to keep in mind, this ETF is based in the Netherlands, so there will be a withholding tax. I pay 15% when I get dividends from my two holdings from the Netherlands. So check what tax treaty your country has with the Netherlands and see how that fits you. Congratulations to all you guys who have held this for a couple of years. Excellent pick, and thank you for bringing this ETF to my attention. But what about you? Do you own it? Or would you consider buying it? Let me know in the comments. But that's it for this one. Don't forget to like, comment and subscribe. Otherwise there will be a lot of dividend cuts for you. I'm the Swedish dividend investor and I will see you in the next one. Stay smart, stay patient and keep stacking those dividends. Ha det gött!